Monday, July 31st. Market analysis, Stan Ehrlich. We have a little bit of a rally early this morning in stock market indexes that challenged recent important rally highs. And at the moment, we're failing and starting to slip back down again and possibly going to make new lows for a few hours and very close to the low of the day so far. Currently 9:50 California time, slightly after the middle of the trading day. And I always start out with the stock market indexes and the spider typically. So here we have the daily vertical bar chart. It's the same data as a candlestick. So on Thursday of last week, we had a classic. It doesn't mean it's going to work, but it does imply that the odds are real high that it's going to work. Bearish engulfing ER sell signal. And so far on Friday, we had a rally that was a little bit more than I was expecting, which is typically around the middle of the range of the bullish or bearish engulfing red or green bar, price bar. So we're short ER3 and we still are, and we have not hit the protective stop, which is just above last Thursday's high. All I need now is for the market to start to head south. And being down 15 ticks is not really heading south. We are down a little bit, and it's less than that on the DIA, down 8, and also down just a hair, 25 ticks on the QQQ. So nothing is really dropping very quickly. Could happen by the end of the day, of course. So we have the possibility of another bearish engulfing if we can get below Friday's low. And that's because we're still in overbought, or were within the last few days, overbought conditions. So let's see if I can generate another red bearish engulfing, which would make it look a lot more probable that the market is going to head south, which I think is likely. I am looking for a move down to the green zone here, 444, to close some gaps, a gap. I am thinking that it could drop off a little more to 437, 438, but I'm not expecting it to go much more than that, and then back in a new high ground. Tomorrow starts August, and then September, and then the October lows again. I'll go into great detail like I did last year and peg the October 13th incredible major bottom for the bear market in the beginning of this bull market to the day in advance. So we'll see what happens on this dip, which I'm expecting. The DIA, practically the same story. Bearish engulfing on Thursday of last week, came up a little bit more than I'd like in a resistance area, and overbought conditions add up to some of my very favorite combination of conditions for market turning around conditions. And this is turning back down. But again, it is a very good bull market, and downside corrections are very normal. And I'm thinking we're going to come back to about 345 and maybe a little lower in the next couple of weeks. What about the QQQs? They did not have a bearish engulfing at the top of the rally, but they did hit a resistance area and they were overbought. So we were only missing the bearish engulfing price action. I'm still expecting it to slip, maybe a little less than the DIA and the spider, to close a gap also, and then turn back up again. We can be watching the major bull trend line here and see if that holds. And that would be within the next week or two. Again, last day, the Russell 2000 did have a bearish engulfing, but today we have managed to rally above the high of last Thursday's bearish engulfing, which kills the signal. Now, that doesn't mean that it's not telling us that the market is trying to top out. In fact, basically that's true, because these bullish and bearish engulfings, although they are frequently the high and the low day for a substantial amount of moves and time periods, they are not always the exact high or low. They're part of the topping out or bottoming out process, or they're part of a very relatively minor, like here on June 14th, downside correction and an up move. So I'm still expecting to see the market turn around and head south. We are challenging the highs in January of this year at today's highs. Although it's not overbought, that's still a little bit of resistance. We'll see what happens. I certainly like the way the other indexes are acting and the area that they're in and the overbought conditions and the reversals. How about futures? First of all, I'll touch on the 30-year long bond, which is doing marvelously. We had the 88-day cycle low. Let me shift this back just a hair. It should be move back 2 notches. Very good. And right in the middle of the window of opportunity, which is the green bar, it's 10% of the 88 days from bottom to bottom, which has been unbelievably accurate for at least 6 repetitions of 88-day cycles. That's a lot to be that accurate. I'll show you. Last one, July 10th, right on the money. The one before that, March 2nd, perfect. Of course, I started at that point for measuring the cycle, so we know that was a perfect starting point. But then 88 days earlier, it was perfect. And I might want to point out something here. We had the cycle low on October 24th of 22. A little bit of a rally came down and challenged the previous low a couple of weeks later. What do you think we just did on Friday? We came back into the support area, challenged the low of a couple of 3 weeks earlier, and now today, well, it moved up a little bit on Friday. We're following through a little bit more, and so it looks like it is starting to move up out of that support area. This is a very bullish long-term pattern, but we need to have a long-term breakout above 134, 135 in order to really get the long-term, many months later, bull market rolling. All right, cycle lows, support areas, oversold conditions, and in some cases, an ER bullish engulfing like on June 16th of 22. Now, we're going to start looking at the other futures contracts and some exciting, interesting stuff happening. The S&P E-mini came back up, as you know already, a little higher than I'd like, but we're now slipping a little more. We're down 40 on the Spider, 13 and 58 on the DIA and the Qs. I'd love to see those down a point or more before this is over, another 10 minutes or so. Next, 30-year long bonds we just discussed in an excellent area of support, and you've got that cycle low that happened on July 10th and a possible minor double bottom, very, very similar to what happened back in October and November of 22. Next, the 10-year notes are almost the exact same situation. The same cycle exists and basically the same patterns. Bouncing off support, reversing cycle lows worked outstandingly well. We need to get up to and through previous price action resistance and have a major long-term breakout in the months to come above 117. Next, the energy markets, crude oil is about to get into a resistance area that has been good all year long. Not that it's going to stay that way, but it's likely. So just a squeak more higher, and we are already modestly overbought, would be great especially if if the market creates a bearish engulfing, then I've got my signals and I'll be screaming bloody murder that the crude oil is topped out and is probably going to come back down toward the 70 area where there is a support area. Now, this is a long-term bear market, and I'm thinking that in the months to come, we're going to see it probably below 60. Next, heating oil in the area of resistance, and we are overbought, and substantially so, at 92 on my custom relative strength index, which is the bottom subgraph. So I'm expecting this to turn around and head south any moment. Today, definitely this week. Next, we've been in a long-term bull market in natural gas. I don't see my natural gas bills going down, but this is way down to 2.5, and it was in 7 and 8 area just last winter. So somebody's making, the middleman, of course, a good chunk of money here. I expect this to break out to the downside. I don't see this as yet any kind of a long-term bottom. And there's a chance of that, but I need to have a bullish breakout in order to start talking about it. The last 3 signals have been bearish, minor profit potentials in each one of them for a day or a few days. So I'm looking for a downside breakout. Next, gold and silver and platinum. Gold and silver have had in the last couple of weeks 2 bearish ER sell signals. First one on the top of the rally. The second one last Thursday. We've come back in both cases into the area where ER3 is going to be getting short, and these signals are working very nicely. Now, today's rally, a touch more than I would have liked. Friday was good enough, and I would have liked to have seen today go straight back down, but this doesn't violate any rules. I'm just in a little no man's land momentarily. And my way of thinking, if you sold short here, your risk is smaller, putting the stop where the yellow dot is, and your profit potential is larger. You're just not looking at any particular start of a downswing at the moment. Silver, same comments, precisely. I am bearish in both, and I'm looking for lower levels. And we have had some phenomenal signals in silver in particular this year. We picked a major bottom to the exact day, major top to the exact day, second high and a double top to the exact day, the bottom of a significant decline to the exact day, and recently a rally high a couple of weeks ago to the exact day. So silver's been really good to our system. I'm looking for lower levels real soon. Next, platinum. Downtrend, not very decisive. Lasting a heck of a long time yet. A little bit more of a neutralish type of statement, but I am looking for it to follow gold and silver lower, assuming I'm right in gold and silver. So this rally today doesn't mean too much to me. It's not particularly bullish. I know it's a bullish engulfing, but we were not oversold, and I don't have any signal per se. That's what I'm looking for, is oversold conditions within the allotted amount of time and an outside trading day bullish or a bullish engulfing signal. And that worked great. That sell signal worked fantastic. Excellent trade short, excellent trade short, excellent trade short. And although that wasn't the lowest low, a really good buy signal, that one did not work very well, to be honest with you. And this one was what I pointed out already. Great. Now, next one is natural high-grade copper. We are now up to and above slightly a resistance area I thought was going to stop the rally. And although we're just a little bit above, excuse me, the high of the resistance area, it does not mean it's not going to start slipping right back down into the red zone and then below it, which is what I think is going to happen. I was a little bit more expecting it to stop around, 3.97 or something instead of 4 and small change. But we'll see what happens. No trade at the moment, but I'm looking for a downturn. Next, soybeans. Fantastic. We had on Thursday of last week a bearish engulfing almost at the high of this bull market, a whopping bull market. And now we have a gigantic 3-day break. And we're already back to the lows that we made in early July. This is the last day of July. And just a little bit lower, we would make a new low for the whole month. So this is a huge down day. What do we got? 50 some cents at the moment? Yeah, big down day. Could break down even more. First support, 1301 to about 1280. And we'll see what happens when we get there. Now, look at this. We're almost oversold just that fast within 2 days after being overbought. Again, this is my custom RSI, and it moves pretty quickly. I learned RSI from Wells Wilder himself, and don't use the same parameters. The only constant is change itself, and it's been a long time. So I'm thinking it's a pretty good likelihood that we could poke our nose into this blue support area that I drew and bounce back up a little bit again. Next, bean oil, big down day, not that close to oversold, got more elbow room on the downside. We did get overbought and it turned down. No particular no particular signal, and looking for a little bit more of a break. Not super confident about my objectives here. Next, soybean meal. Same kind of commentary, looking for lower levels. I think we left a very small gap behind, so gaps are almost always closed. So a rally back up to Friday's low would not surprise me and might be a very good place for short sales. And that would be about, 403, 404. Next is corn. Big break in the last few days, pushing up against a major bear trend line, stopped it. Did not quite get overbought. Would have been a little nicer to see that happen. And I'm looking for a test of, and probably a break below 473, recent lows in the last couple of months. Long-term bear trend seems to have started here, to say the least. It's been over a year, and we've had several highs, for the most part, lower than previous rally highs, except for that sharp one that we had last June 21st. But that did get overbought and basically stop at resistance. Next, wheat. Same comment. All the grains are getting a lot of pressure today. Stopped at resistance on a rally, did get slightly overbought. Looking for a test of the lows of the trend here, and very possibly new lows. Next, live cattle. Great. Sell signal on the high of the rally, and a whopping rally at that. I'm expecting to see a 175 print to a 170 print in the next week or two. New lows for the move so far today since the bearish engulfing, which was on July 20th, doing fabulously. Next. Oh, one other thing. Cattle, the day after the bearish engulfing, had a trigger to go short at the red dots. It looks like we came up and touched that red dot almost exactly, so close you can't even see the difference. So the high of the day on July 21st was the spot predicted by the strategy to get short. Never had a losing moment. Next chart is the lean hogs. Sideways trading range. How should I say this? Wallowing around a little bit in a sideways range for about a month or so. Large area of resistance for a long time. We've come back up to, and I think it's going to turn back down. Next chart, OJ. Well, finally, we are seeing, and I'm not real convinced about this as yet, a bearish engulfing ER sell signal. We are not really dropping that much at the moment. We've come all the way back to slightly lower on the day, but the signal is still intact unless it gets higher than Friday's close. Then it cancels out the signal, and we're very close to that. But this looks like the beginning of a bear move in OJ, especially if it can close below Friday's low, Friday's closing price. Then we have a signal. Next chart, cocoa overbought. Wouldn't surprise me to see in the next few days the same kind of thing we're looking at today in OJ in the cocoa market. Overbought conditions, extreme bull market, kind of like a blow off top, not quite, but some similarities. And I think it's about to turn down sharply, quickly, and substantially. Next, cotton the rag. We had on Thursday a bearish engulfing in a resistance area. Remember some of my favorite stuff. And overbought conditions that were very substantial. 86 is pretty high on the RSI scale. Not only that, ladies and gentlemen, but the exact price at which we wanted to go short according to my trading strategy is 86.30, and today's high is 86.31. I'm sorry, we missed the high of the day by one tick, but we are short one tick under the high of the day, so you get a fill, and it looks like it could close lower. It's higher right now by a very small 0.33. And I'd just love to see this thing drop like a rock. Again, resistance area, overbought conditions, and a bearish engulfing candlestick. Some of my favorite stuff. See it happen often enough. So, rally, overbought, no signal, but I think sugar is heading down toward 2050, 20, 19, 18. In the next several weeks. Next, we've got coffee, a bit of a rally today. I mentioned before, we don't always get the lowest low with our buy signals, ER green signals, but they are frequently part of a bottoming out process. And this looks like it's trying to bottom out. I'm looking for maybe a rally, and we're not finished breaking out yet. I really need to close at 166.22 or higher. And then big deal, maybe we're going to move back up to 177.30 and on the highest side, 185. That is it for the moment. Have a great day.